If you're looking to finally become profitable trading Forex in 2023, you might want to pay close attention to this video because I'm going to show you a super accurate buy and sell Tradingview indicator that might just take your trading career to the next level. This indicator is great at finding buy and sell entry points based on market momentum, but we're going to combine it with other confirmation indicators to create a highly effective trading strategy. Now, you may also want to stick to the end of the video because later in the video, I will also backtest this particular strategy 150 times using a risk to reward ratio of 1:2 just to see how it performs in different market conditions. Without any further ado, let's get into it. So the buy and sell indicator we're talking about is called twin range filter. To add this indicator to your chart, go to the indicator search tab on TradingView and type in twin range filter, and it's gonna be this one by $MCK. For this demo, I'm gonna be using the EUR/USD on a 1 hour time frame, but you can use this strategy on any security or on any time frame. Now we're gonna access this indicator settings in order to change it up a bit. To do that, double click on the indicator to access the settings panel. Then head over to the inputs tab and change the fast period to 25. After that, change the fast range to 1.5 and then click OK. So this indicator will be our entry confirmation indicator. When it gives a long signal, we buy. When it gives a short signal, we sell. Pretty self-explanatory. Now for the second indicator, head back to the indicators tab and type in volume. Be sure to select this one by TradingView, that's under technicals. Again, we're gonna access this indicator settings by clicking right here. Head over to the style tab and click on the volume MA checkbox. Then click here and change the color to white just so it's easy to see when reading the charts. After that, click on the inputs tab and change the MA length to 10 and then click OK. We will be using this indicator to determine if there is enough volume in the market to push the price in the direction of our trades. Whenever the volume bar is above the MA line, we will be looking to take trades since this would indicate that there is enough volume in the market to push the price in the direction of our trades. But whenever the volume bar is below the MA line, we will not take any trades because this would basically mean that there is not enough volume in the market. Last but not least, our third indicator is called Super Trend. Click on this one under technicals. Again, we're gonna access this indicator settings by clicking right here. On the inputs tab, change the factor from 3 to 5. Then head over to the style tab and uncheck this background plots like this. After that, click OK. We will be using this indicator to identify trends in the market. When it's green and the price is constantly above it, that would be considered a bullish trend, so we're only gonna be taking long trades. But when it's red and the price is constantly below it, that would be considered a bearish trend, so we're only going to be taking short trades. Now let's go over the conditions for entering trades with this strategy. To enter a long trade, first, the super trend indicator should be colored green and the price should be constantly trading above it. Second, the volume bar of the volume indicator should be above the moving average. You know, this guy right here. And then the last condition is for the twin range filter to print a long signal. All these conditions are met on this candle, so we enter a long trade. We're gonna set our stop loss below the most recent swing low, which is this one right here. For the take profit, we're gonna set it at 2 times the risk. We let this trade run and full TP. Now here's another example. As we can see here, the super trend indicator was colored green and the price was trading above it. The volume bar of the volume indicator was above the moving average, you know, this guy right here. Finally, the twin range filter issued a long signal. We enter a long trade here, set our stop loss below the most recent swing low, which is this one right here. And for the take profit, we're gonna set it at 2 times the risk. We let this trade run and full TP. We're gonna do the exact opposite when entering short trades. First, the super trend indicator should be colored red and the price should be trading below it. Second, the volume bar of the volume indicator should be above the moving average, you know, this guy right here. And then the last condition is for the twin range filter to print a short signal. All these conditions are met on this candle, so we enter a short trade. We're gonna set our stop loss above the most recent swing high, which is this one right here. And for the take profit, we're gonna set it at 2 times the risk. We let this trade run and full TP. Now here's another example. As we can see here, the super trend indicator was colored red and the price was trading below it. The volume bar of the volume indicator was above the moving average. Finally, the twin range filter issued a short signal. We enter a short trade here, set our stop loss above the most recent swing high, which is this one right here. And for the take profit, we're gonna set it at 2 times the risk. We let this trade run and take profit. It actually hit stop loss. And this necessarily isn't a bad thing because no strategy will ever be 100% correct all the time. All you need is a 50% win rate and a profit factor of just above 1.1 or 1.5, a good risk management, and you're good to go. Now let's take a look at this random example, see if it hits TP or not. All the conditions for entry were met. I'm just gonna go over them real quick. The super trend indicator was colored red and the price was trading below it. The volume bar of the volume indicator was above the moving average. Finally, the twin range filter issued a short signal. We enter a short trade here, set our stop loss above the most recent swing high, which is this one right here. And for the take profit, we're gonna set it at 2 times the risk. We let this trade run, and this time it hit TP. The question now you may be asking yourself is,
how exactly does this strategy perform in different market conditions?
Well, to answer that, I'm gonna backtest it 150 times using a risk to reward ratio of 1 to 2. The account size is gonna be set at $1,000 and we're gonna be risking 2% of that every time we take a trade. Let's get started. After backtesting this strategy 150 times, we see that the win rate was 64%, which is really good for a risk-reward ratio of 1 to 2. The gain on the account was 1,350% over a backtesting period of 14 months. It had a great profit factor of 3.56, 8 consecutive wins against 4 consecutive losses, and a maximum drawdown of 7.76%. Bear in mind that this backtest was done on only 150 trades, which is pretty decent, but definitely not enough to guarantee future results. So if you want to trade using this particular strategy, be sure to do extensive backtesting and forward testing and customize it to your liking so you can have as much confidence as possible when trading with it. Experts recommend backtesting be done with at least 300 trades, just so you know. If you like this video, please hit the like button below or consider subscribing. Thanks for watching, and I'll see you guys next time.